Assalamualaikum warahmatullahi wabarakatuh. My name is Daniel Amira Aiman bin Ahmad Zamuri, and I will be the first presenter for our seminar 2 today. So let's begin with the introduction of corporate sustainability. So what is actually corporate sustainability? Corporate sustainability could be defined as an approach aiming to create a long-term stakeholder value through the implementation of business strategy that focus on 3 areas, which are economy, environment, and society. Sustainability is based on the concept of sustainable development, which development that meets the needs of the present without compromising the ability of future generations to meet their own needs. Sustainable development focus on achieving 3 interrelated outcomes, which are sustainable economy, a sustainable environment, and a sustainable society. So, there are 3 core elements of sustainability, which are sustainability is concerned with the future and with ability to maintain certain values, assets, or capabilities over the long term. Next is sustainability involve decisions that address the interaction between environmental, social, and economic domains. And lastly, sustainability requires choices that take account of equity within society and across generations. So next, let's talk about the benefits of sustainability. The first one is achieving cost saving. This could be occurred since having corporate sustainability could assist a company or organization in reducing resources consumption by limiting the pollutant output, which will lead to economy efficiency. The next one is meeting customer needs. Operations can more quickly respond to environmental qualification criteria that their corporate customers build into their purchasing procedures. And the last one is anticipating stricter regulations by choosing environmental responsible practice. Business can be prepared for changing legal regulations, which in turn bring benefit to them, such as reduce the operating risk, improve discussion and communication with public decision makers, and can ultimately deliver competitive advantage.
Now, I will talk about sustainability report. Sustainability report can be defined as a voluntary, solicited, or required of non-financial performance information to outsiders of the organization. Sustainability reporting deals with information concerning environmental, social, economic, and governance issues in the broadest sense. A sustainability report is also the main tool available to an organization or company to voluntarily communicate its performance and impact, whether it is positive or negative. The sustainability report addresses how the company will succeed sustainably now and into the future in relationship to their internal and external stakeholder demands. Advanced sustainability reporting tools enable automated data collection, provide comprehensive sources of sustainability data, and make disclosure efficient, precise, and easy. However, collecting, managing, and disclosing corporate data is an extensive task. Tools are often very archaic and labor intensive. At the same time, reporting and management software has evolved significantly and provides powerful analytics and advanced planning features to improve sustainability performance. There are 8 benefits of sustainability reporting. First, to keep an overview so you know what to focus on, which is to help you maintain an overview amongst all the chaos in the company. The process of creating the sustainability report allows to reflect on the past reporting period, which is in what areas we have made the progress, or in what areas we have lagging behind, or where our goals are too ambitious, or we just need more to reach them. The second one is to ensure regulation compliance. The best way to ensure that we are staying compliant with the ever-shifting pool of rules and regulation is through sustainability reporting. We can set goals based on whether we want to meet minimum compliance requirements or shoot for more ambitious targets and become a sustainability leader. The third benefit is that we can become more attractive to customers. One of the benefits of sustainability reporting is that we can turn the company from a faceless corporation into a company consumers so that they can trust and develop a bond, and also to boost the customer's loyalty. The fourth one is to attract talent. It's not just on the consumer side that people prefer sustainable businesses. Reuters found that climate change, human rights, and social equity are issues of growing importance for employees, especially millennials, to more likely to work for a company with strong environmental policies. By publishing sustainability reports and building your credibility as a socially and environmentally responsible company, we can make the company an attractive workplace for potential job applicants. Next, to build employee pride and loyalty. To become more transparent, sustainability reporting company can also give current employees an extra reason to be proud of where they work. We can rally our employees behind the cause and boost morale and engagement. In addition, sustainability reporting can also upgrade the status of sustainability in your company's agenda. Sustainability reporting, especially on a frequent basis, elevates the status of your company's sustainability agenda from a merely a nice to have up to an important factor for key business decisions. Next, to become more attractive to investors. Sustainability reporting can help to win stakeholders' trust, and this is particularly true of investors. Investing in sustainability shows that we are looking to manage long-term risk to the company and makes a more attractive company for investors. The last one is to increase transparency, credibility, and accountability. A benefit of sustainability reporting is that we are declaring the intention to improve the company in various ways, and in subsequent report that we detail the progress towards those goals. The purpose of sustainability reporting is to improve the transparency of organizations' activities. There are twofold of the purpose of sustainability reporting, which is to enable companies to measure the impact of their activities on the environment, on society, and on the economy. Companies can get accurate and insightful data which will help them improve their processes and have a more positive impact in society and in the world. The next one is to allow companies to externally communicate with their stakeholders. This allows stakeholders such as employees, investors, media, NGOs, among other interested parties to get to know better what are the short, medium, and long-term goals of companies and make more informed decisions. These decisions can spread from investing in a business, buying its products, writing positive or negative reviews, protesting in the streets against the intentions or actions of an organization.
Now, let's move on to the Global Reporting Initiative, which is GRI. GRI is the independent international organization that helps business and other organizations take responsibility for their impacts by providing them with the global common language to communicate those impacts. The GRI standard enables any organization to understand and report on their impact on the economic, environmental, and people in the comparable and credible way, thereby increasing transparency on their contribution to sustainability development. The goal of GRI was to create an accountability mechanism that will ensure companies adhere to responsible environmental conduct. Under GRI framework, it required the company to define material aspect, access the boundary for each aspect, describe how organization is managing each material aspect, and report performance indicator that explain how each material aspect is being assessed. GRI is now the most widely used sustainability reporting framework. There are 4 key elements in the framework. The first one is the sustainability reporting guideline, which are the constant of the framework. This consists of principles for defining a report content and ensuring the quality of the reported information. Second is indicator protocols that exist from each of the performance indicators contained in the guidelines. This protocol provide definition, compilation, audience and other information to assist report writers and to ensure consistency in their interpretation of the performance indicator. Next, the sector supplement complement in the guideline with interpretation and guidance on how to apply them in a given sector and include sector-specific performance indicator. Applicable sector supplement should be used in addition to rather than in place of the guidelines. For the last one, technical protocols are created to provide guidance on issues in reporting such as setting the report boundary. They are designed to be used in conjunction with the guidelines and sector supplements and cover issues that face most organizations during the reporting process.
Now, I will talk about the sustainability, management accounting, and stakeholder. So, who is stakeholder? Stakeholder is a party that has an interest in the company and can either affected or could be affected by the business.
Hi and Assalamualaikum. My name is Siti Nur Shazwani and I'm going to explain about the International Integrated Reporting, also known as IIR. Integrated reporting is a complete report of components involved in the creation of a company value over the short, medium, and also long term. Integrated reporting comprises communication of financial capital and non-financial capital, contributing to the creation of organizational value. An integrated report provides insight into the organization's activity, its ability to create value over time, and provides a financial return to the providers of its financial capital. The primary purpose of an integrated report is to improve the quality of information available to providers of financial capital by communicating broader and more relevant information that can assist in effective capital allocation decisions. The main objective of integrated reporting is to explain to capital providers how an organization creates value over the short, medium, and long term. The focus of integrated reporting is on providers of financial capital because they influence how capital is allocated. Next, we're moving on to the value creation of IIR. As you can see, there are 6 value creation and there are financial capital, manufactured capital, intellectual capital, social and relationship capital, natural capital, and last but not least, human capital. I'm going to explain it one by one. Financial capital is the pool of funds obtained through financing or generated through operation or investment. Next is manufactured capital. Manufactured capital is manufactured physical object used in the production of goods or the provision of services such as buildings, equipment, and infrastructure. Besides, intellectual capital is knowledge-based intangibles including intellectual property such as patents, copyright, software, and license. The fourth value creation is human capital, which is defined as the competencies, capabilities, experiences, and motivation of people, along with their ability to lead, manage, and innovate to implement their organization's strategy. Furthermore, social and relationship capital is the institutional and social relationships, including shared norms, common values, and behavior. Intangible associate with brand and reputation and an organization's social license to operate.
Last but not least, natural capital, all renewable and non-renewable resources that support the prosperity of the organization, including air, water, land, minerals, forests, along with ecosystem and biodiversity health.
There are 4 types of sustainability reports in ASTRO, which is the environment, social, which is talent or education, community development, and the last one is governance and ethical business practices. ASTRO states that they are caring for our environment. ASTRO environmental advocacy includes working with Greenpeace Malaysia to reduce the use of plastics, WWF Malaysia on the Earth Hour initiative, and support Climate Governance Malaysia's action plans on climate change. They also collaborated with National Geographic for the Planet Possible campaign to inform, inspire, and empower consumers to adopt a more sustainable lifestyle. They aim to effect positive change through our multi-platform reach, giving a voice to climate causes by informing, educating, and raising green awareness nationwide, advocating for a greener planet. Next, for education, ASTRO diversity and inclusion as instrumental in maintaining a nurturing environment and empowering culture, incorporating diverse perspectives to deliver on business goals. Underpinned by their equal opportunity policy, which ensures fair recruitment and equitable compensation without discrimination of any form such as ethnicity, gender, age, religion, nationality, and disability. The last one is the governance and ethical business practices. They strengthen their business ethics and compliance culture with regular training and through Code of Business Ethics and ASTRO Anti-Corruption Framework and Whistleblowing Policy and Procedures. Establish ESG Roadmap which outlines the principles and key building blocks for the management of ESG commitments.
Effective stakeholder engagement is essential in ensuring that ASTRO remains sustainable into the future within the EES landscape. ASTRO engage with key internal and external stakeholders on an ongoing basis to obtain feedback as to how they can better align their business practices to address key stakeholders' areas of interest. At ASTRO, they put their customer first and engage with them across a variety of platforms that enable ASTRO to receive feedback effectively and serve them comprehensively. While ASTRO communicate with customers through various digital and physical touchpoints, they also gauge their satisfaction through a customer satisfaction index to identify areas of improvement. For employees, they are central to keeping ASTRO at the forefront of their business, and ASTRO make it their priority to ensure that they remain engaged and fulfilled. Employees are able to access the latest group information through the intraweb, frequent town halls, and have opportunities to further hone their skills through various training programs. Employees are encouraged to provide feedback both informally and formally through surveys. For shareholders, ASTRO endeavour to engage with the investment community through as many avenues as possible, which includes regular calls or meetings with research analysts and investors, quarterly presentation of ASTRO financial and operational results, easy availability of financial reports on ASTRO corporate website, conferences, roadshows, and investor days. Shareholders can also attend the AGM as well as receive the annual report. Next, for government and regulators, ASTRO engage with regulators and government agencies to ensure compliance with the Malaysian Communication and Multimedia Act 1998, which is governed by the Ministry of Communication and Multimedia Malaysia. ASTRO also ensure that all content broadcast via their platforms are in compliance with the content code, while providing regular compliance training to their employees. For vendors, ASTRO ensure that all their vendors, contractors, and suppliers abide by their COBE, which sets the practices and standards in all their dealing with ASTRO, and the environmental preferable procurement guidelines where possible to ensure sustainability. For community, through Yayasan ASTRO Kasih, ASTRO strives to leave a positive impact on the community around them and find it a privilege to be able to serve. Astro employees frequently volunteer for projects under their 4 main pillars of lifelong learning, community development, sport and wellness, and the environment. And last but not least, as a content and consumer company with extensive reach to consumers, Astro engage with media across all platforms, be it TV, radio, print, social and online. Astro shape their public image and create buzz for its latest content and products offering via press conference, media interviews and social media campaign, as well as collaboration with key online leaders to reach the digital native.
As you all know, Astro is the chosen company in our presentation. I'm going to explain the value creation of Astro and start off with the intellectual capital. Astro is the largest content creator in Malaysia with over 9,000 hours produced and commissioned in FY21. Astro's intellectual capitals includes Astro brand and reputation, copyrights, system, software, and license. Next, Astro cash generative business allows them to reward the shareholders with dividends and reinvest for future growth. Astro has ample access to financial market and institutional lenders which are related to financial capital. In addition, industrial capital, Astro reboosts capability to produce, aggregate and distribute content across all platforms alongside the extensive market reach. Astro also nurtures, harnesses and hones the diverse skill sets and expertise of Team Astro's on-screen and also off-screen talent, and that is related to human capital. Social and relationship capital relates when Astro develops and maintains good relationship with stakeholders, understanding and addressing their concern to ensure they maintain the social license to operate. Last but not least, in running the business, Astro has utilized natural resources responsibility and is mindful for our environmental footprint.